Hello everybody. Hope you all are doing really well. This is CA Supreet Agrawal, your faculty for ACCA AAA AAA and law subjects. And my dear friends, today is going to be a special session on audit procedures. And my dear friends, today we are going to solve question number 1, 2 and 3 of your chapter number 9, which is audit procedures and evidence. My dear friends, this particular chapter is one such chapter where you need a lot of practice. So what I'll be doing is I'll be solving 2 to 3 questions with you, and I will be giving you a good guidance about how do you need to move further, and then you should practice the remaining questions as well. Yes, so please confirm me on the chat box if I'm audible and visible. Good. So very good evening everybody. Hope you are doing really well. My name is CA Supreet Agrawal and I'm your faculty for ACCA AA AAA and law subjects, and along with that I also teach you USCMA. My dear friends, when we talk about AAA chapter number 9, this chapter becomes very important for your self practice as well. And today we are going to solve 2 to 3 questions to ensure that you understand how to particularly handle the questions of this particular chapter. Yesterday we conducted one session where we discussed about how to answer the questions related to audit procedures. So today we are going to have a little more discussion about it, and then we are going to solve certain questions as well. Now when we talk about related party relationships, what we need to understand here is that we need not just the technical knowledge of it, but we also need the audit related knowledge of it, because related party is one such area which is talked about in SBR syllabus also, that is from the accounting point of view also, and from the audit point of view also there is ISA 550, right? So for each of the following, discuss what? Discuss whether related party relationship exists or not, stating any additional factors to consider or information required to reach a conclusion on whether a related party relationship exists. So where the information is insufficient, you have to mention that what more information is required. Now Mr. Smith holds a controlling interest in 2 companies, Vos and Stubbs. Roberts is a wholly owned subsidiary of Vos. Tell me. So there is Smith holds controlling interest in Vos and Stubbs, and Roberts is a wholly owned subsidiary of Vos. Now tell me, are these related party relationships? Are these related party relationships? Yes, these are related party relationships, right? Now Mr. Jones holds 75% of the voting capital of Tucker and 40% of the voting capital of Wilton. So Jones holds 75% of Tucker and 40% of Wilton. Are these related party relationships? Please evaluate and let me know in the chat box. Yes, please evaluate and let me know in the chat box. Yes, please evaluate and let me know in the chat box. Yes. Okay, I hope you have answered. Okay, we'll check later on all together. Now question number C. Paddy nor Nancy holds shares in Forsyth. Paddy not Nancy holds shares in Forsyth. Okay, so let's try to understand the whole case. Nancy and Paddy, who are husband and wife, are the directors and majority shareholders of Flynn. Nancy, Paddy are the directors in Flynn. The company makes purchases from Forsyth. Okay, Forsyth, a company controlled by Paddy's brother, bro. Okay, Danny is a director in Forsyth. Okay, Danny holds no shares in Flynn, and neither Paddy nor Nancy hold shares in Forsyth. Okay, are these related party relationship because they are controlled by related parties who know each other? Yes. Just answer yes or no. That works for me. Yes, just answer yes or no. Okay, now let me explain the 4th case. I think this is the last case. Yes, Central is the parent of a group. Central is the parent of a group which includes 75% subsidiary Green. Okay, the remaining 25% of Green is owned by 2 of its directors, David and Donna. So Central holds 75% of Green, and rest 25% is held by David and Donna, who are the directors of this. Okay, now tell me. Please take 2 to 3 minutes. Tell me the answers for all of them and then we will move further. Yes, take 2 to 3 minutes, evaluate, and then let me know what is your answer for all of these. Yes, I hope it's done. So let's discuss. When we discuss about Smith, Woes, Stubbs, and Roberts, they are related parties to each other. Why so? Because there is a common control, right? When we talk about second case, which is Jones, so Jones will be related to Tucker but not Wilton. Why so? Why so? But not Wilton. Why so? Because Tucker is under the control of Jones, but Wilton is not under the control of Jones. Therefore, Jones and Tucker would be related parties, but Tucker and Wilton or Tucker or Jones will not be related parties. Then Paddy and Nancy. So Nancy and Paddy would be related party to Flynn. David would be related party to Forster. Now, since David is brother of Danny is brother of this Paddy, so in this particular case, since they are close family relatives, so these two companies would also be said to be relative to each other. Plus, Nancy and Paddy would be related to Forster, and Danny would be related to Flynn. Okay. Now the last one, Central. So in case of Central, what has happened is Central owns 75% of Green. So Central and Green would be related parties. David and Donna would be related parties to Green as their directors, but David and Donna will not be related to Central. Okay. Now let's quickly read the answers as well. Oh, it got stuck. Let me check. I'm just shutting off the iPad for a minute. Yes. Oh, it has gone. Maybe let me reopen it. Yes, let me reopen it. Page number 109. Page number 109. Yes, this one. Okay, so now let's read the answer as well. Yes, I think, yeah, now it is visible. Okay, so Woes, Stubbs, and Roberts all have a related party relationship with Smith, as they are all directly or indirectly controlled by Smith only. Yes. Roberts and Woes are related parties. Yes, we have discussed it. A related party relationship also exists between these three, as all are subject to common control. We have discussed it. Now when we talk about Jones, so Jones, Tucker and Jones are related parties, as Jones controls Tucker under the first category we have discussed. Then Tucker and Wilton are not related party, as they are not subject to the common control. We have discussed that. Nancy and Paddy are related parties with Flynn as their directors. We have discussed that. Danny is a related party with Forster as he is a director. We have discussed that. If Danny and Paddy are close family members, then Nancy and Paddy would be related with Forster, the company. Yes. Danny would be related with Flynn, the other company. Yes. Flynn and Forster would also be related to each other, as they are controlled by same family members. Right. Now, Central and green are related party due to the parent subsidiary relationship 75%. David and Donna are related parties with green as their directors, right? And on the information above, David and Donna do not appear to be related parties of Central, but they would be related parties of Central if they are also directors of Central, right? With this, we have solved question number 1. Now, let us focus on question number 2. Question number 2. This is also very, very important. Right, question number 2. This has certain data also, so please be very, very specific when we read. Now, let's first discuss about the requirement here. The requirement is pretty clear. For each of the above issues, comment on the matters that you should consider and state the audit evidence that you should expect to find. So, matters to be considered and state the audit evidence that you should expect to find in undertaking your review of the audit working papers and financial statements of Vema company for the year ended. This is very specific question, right? Now, let's discuss about it. It is 1st July 2025. You are the manager responsible for the audit of Vema company. Okay. 1st July it is. 1st July it is. Okay. We are not sure about what is the year end. So we cannot say if it is the year beginning, year end or what. Now Vema offers a national network for the distribution of wholesale goods through a fleet of heavy goods vehicles and has one wholly owned subsidiary. Vema does what? Offers a national network for the distribution of wholesale goods through a fleet of heavy goods vehicles, HGVs, and has one wholly owned subsidiary, Weddell company. Okay. So Vema has one wholly owned subsidiary, 100% wholly owned subsidiary by the name of Weddell. Okay. The draft consolidated financial statement for the year ended 31st March 2025. This is there. So March, April, May, June. 3 months after year end. 3 months after year end. Right. Show revenue of $125 million. And in 2024, it was $114 million. Profit before taxes of $12.4 million. In 2024, this was $10.9 million. So both have increased. And total assets of $110 million. And it was $93 million last year. The following issues arising during the final audit have been noted on a schedule of points for your attention. Historically, fleet vehicles have been depreciated at 33.33% on a straight line basis, as it was Vema company's operational policy to replace them every 3 years. Looks fine. During the year, Vema company decided to change the basis of calculation to 25%, reducing balance to reflect the fact that HGVs are only replaced as and when necessary. So 33.33% SLM to 25% reducing. This is the change in accounting estimate, right? Now, HGVs are only replaced as and when necessary, usually every 4 to 7 years. Okay. Management has calculated the current year charge on the new basis at $2.9 million. As per the former basis, it was $4.2 million. So reduction in depreciation, and that too high amount. And $4.7 million of accumulated depreciation has been written back in the restatement of opening reserves. So restatement of $4.7 million, big amount, right? Now a payment of $592,000 selected in a substantive procedure has been traced to the following general ledger in June 2024. Okay, a payment of $592,000 selected in a substantive procedure has been traced to the following general ledger: administrative expenses, to other liabilities, to bank. That is, administrative expenses have been paid off to the extent of $592,000 and the other liabilities have been recorded at $194,000. The company narrative reads: termination payment for Mr. Z not processed on any payroll. Oh my god, this is charged to administrative expenses. Very bad. Okay. This is very bad. Now, the audit senior has documented that Mr. Z, a former director of Vema company, was made redundant in December 2023 in a regional reorganization. Oh my god, he has been fired. Now, the financial statements of the subsidiary company Weddell for the year ended 31st March 2025 are audited by another firm. Okay. Profit before income taxes of $0.4 million and total assets of $34.1 million have been included in the draft consolidated financial statements of Vema company. The notes to Weddell company's financial statements as at 31st March 2025 disclose a contingent liability for a pending legal matter estimated at $0.2 million. Oh, is this important? Contingent liability for a pending legal matter estimated at $0.2 million. Half of profit before taxes. Very important, right? In May 2025, the courts found Weddell company to be liable for cost and damages amounting to $1.1 million. Oh my god. After the year end, the courts found Weddell company to be liable for cost and damages amounting to $1.1 million, more than their profit before income taxes. However, Weddell directors have refused to make a provision for any amount as they have lodged an appeal against the judgment. They should be making a provision. Refuse to make a provision. Okay, good. For each of the above issues, comment on the matters that you should consider. Number one, comment on the matters that you should consider and state the audit evidence that you should expect to find. Comment on the matters that you should consider and state the audit evidence that you should expect to find. Comment on the matters that you should consider. We have already mentioned it. And state the audit evidence that you should expect to find. So please mention the audit evidence that you should be expecting to find for all those matters. Okay. So this is a total question of 20 marks, right? Okay. Okay. So please try to mention all the pointers. Along with that, please try to mention the audit evidence that you will be expected to find. Okay. So this is the question. Please take 2 to 3 minutes. Draft your answer, not 2 to 3 minutes, roughly 5 minutes to draft your answer, and then let me know once it is done. Yes. Yes, let's start discussing about it. So the first matter that we should discuss about, they have already given it, and that is the depreciation part. Now what matters we should consider and what should be the audit procedures that we should design, let's discuss about it. When I discuss about the matters to be considered, what is very important to understand here is the change in accounting estimate allowed? Yes, it is allowed. So they are perfectly within the rules to do that, right? But when we talk about the change in accounting estimate, what they have done is they have reversed the calculation of accumulated depreciation as well in the opening reserve. My dear friends, that is wrong because it is an accounting estimate. You need to adjust it for the future, not for the past. So that one adjustment is incorrect, right? That is the matters that you should consider. Now, is this material? So yes, this is material because when we talk about the specifications also say current year charge is $2.9 million, former basis of $4.2 million. So the difference is $1.3 million. Is that material? Yes. If you compare it with the profit before taxes, it is material. When we talk about $4.7 million of accumulated depreciation, is this material? Yes, this is also material compared with the total assets. So that is the matter that you should consider. Now, what are the audit procedures that you should perform? So first of all, what you should do is you should match the balance with the opening balances. Then you should perform the inspection provisions. You should check review the board minutes also. You should inspect the related documents also regarding whether that change in accounting estimate is appropriate or not. You should inquire with the management what is the reason behind doing so, okay, and how it is a better estimate of the depreciation amount. Then we should obtain confirmations from experts if it is required in case of certain specific machineries also. Then what we can do is we can observe whether the related change in accounting estimate has been recorded and measured appropriately or not. What we can do is if we can perform a recalculation of the depreciation. All of these could be the audit procedures. Then let's talk about the second procedure. The second procedure is payment of $592,000 selected in substantive procedure have resulted that this was a payment. This was a termination payment for Mr. Z which is not processed on any payroll. Now first of all, we should evaluate it for fraud also. See, it might happen that our points are not matching with the suggested answer because 100% points are not required to be matched. Your points should be making sense. That's what is required. So here we should also understand whether it is an intentional error or intentional fraud or it is a mistake. Okay, number two is if this was the judgment of the management, we will have questions about the accuracy of the management judgment for other transactions also. We should also discuss about whether this transaction was reported to the auditors for the relevant year or not. We should also discuss about the materiality of this transaction. So this is material because if we take $586,000, it is material for both profit also and for assets size also, right? So this is important. What are the audit procedure that you will be performing? We will be discussing about that. What is the recalculation? We will recalculate the amount to be paid to Mr. Z. We will be inquiring that why such an entry has been made. We will be obtaining a confirmation from Mr. Z that whether he has received the payment and under what heads what taxes has been paid or not. Then we will be discussing about the observation procedure, that whether all the termination payment routes through that or there was a special provision regarding it. So all of these things are very important. Then when we jump into the third point, that is related to the legal matter. So first thing is whether it is important. So yes, this is important. We have discussed about it. It is material only because it is about the subsidiary company. Now, when we talk about the subsidiary company, is it material? Yes, it is material, and therefore it would be material or important for the group as a whole as well. Now when we talk about this particular thing, they have refused to make a provision. So what we should consider is what is the reason of management for not creating a provision. Then when we will be discussing about it, we will also discuss about what is the calculation of provision that they have done. If they have done it, then we will recalculate it also. We will observe that whether there is a management judgment that we will not be taking provision for legal cases unless there is a surety that we will lose, or is this one time point, right? Now what are the audit procedures we will be obtaining, we will be doing? So we will be inspecting the related documents, the supporting documents regarding it. We will be inquiring from the management their procedure for evaluation or for identification of a classification of the provision in the balance sheet. Then we will also be discussing about the confirmations from the legal members also, legal team also. So all of these things are very important. Now when we talk about the changes in depreciation method, see first point, changes in depreciation method. So first thing that we should discuss about is the matter. So is it material? Yes, 1.3 is material because it increases the profit before taxes by 10.5%. If we talk about the write back reserves, this is also important as far as it is concerned with total assets also. Then carrying amount of tangible assets will also be increased by $6 million, which is 5.5% of the total assets. This is important. right? Then management is responsible for reviewing the useful life also. So this point is very much valid. But when we talk about management responsibility, we can also discuss about that if necessary, they need to change the depreciation method if necessary to reflect the changes in expected pattern in economic benefits also. But management's restatement of opening results is the treatment for a change in accounting policy or the correction of an error. This is incorrect because the change in depreciation method is a change in accounting estimate and it needs to be adjusted prospectively. Now the right back to opening reserve should be reversed and current year charge recalculated on the remaining useful life. Now audit evidences. So agreement of opening balances of cost accumulated depreciation to the prior year working papers. Client's schedule showing remaining useful life with current year depreciation calculated at 25% should be checked again. Now a proof of total calculation of what depreciation charge for the year under the new basis should be, that is recalculated. Test checking of a sample of remaining useful life. Review of VMA's fleet replacement policy, whether it has actually been changed or not. Review of age of fleets assets disposed during the year, whether it has followed the policy or not. Then scrutiny of profits or losses on disposal of vehicles, whether there is huge profits or huge losses or not. That will give us the data about whether this particular method, this change in method was actually required or not. Then when we come to the second point, which is termination payment, what we have to understand here is there are certain matters which are very important over here. So $786,000 represents 6.3% of profit before taxes. However, it only represents 0.7% of total assets, so it was non-material if we look at it from total assets. But this was a P&L item, right? Administrative expenses. That is why we have to look at it from profit before taxes. Then Mr. Z was made redundant in the previous accounting period, and after date payment in June 2024 was therefore a subsequent event. Now, if the audit for the year ended 31st March 2024 was not finished when the termination payment was made, it should have already been accounted for because it is a subsequent event. Now, if the liability should have been known about but was omitted from the prior year financial statement, the error should be corrected by a restatement of opening reserve also. Now, it is not unusual that such a sensitive transaction be accounted for using a journal entry rather than processed through a payroll also, because it is a sensitive transaction, it is a material transaction. The golden handshake has been lost in administrative expenses, although it may not be considered sufficiently material to warrant separate presentation in the statement of profit and loss, because it is not that material that it should have a separate line item, but it should be classified under the correct category. As a regional director, Mr. Z would have been a related party. Making the payment to him makes a related party transaction also, and it should be disclosed at the relevant place in the financial statements also. It should also be determined whether the 194 included in other liabilities represents the accurate deduction of tax or social security also, right? That we have discussed. Now audit evidences. See, we are following the similar category, similar techniques that we have developed in the audit procedure question, right? In the last lecture, I have particularly told you about how you should draft your answer for audit procedure. Now audit evidences. Documentation in the last year's working papers concerning provision made for redundancies arising from regional reorganization. The bank payment of $592,000 in June 2024. Settlement during the year to 31st March 2025 of $194,000 should be traced. Mr. Z's employment contract and director service contract in which the terms of termination payment were set out, that should be discussed. Any correspondence with Mr. Z, for example, a letter accompanying the payment of $592,000 stating it is in full and final settlement of the termination of his employment should be checked. Written representation should be obtained that there are no payments to current or former debtors relating to current or prior period which have not been included in the financial statements, that should be taken. Now when we jump into the third part, which is the legal liability, now this becomes a little important, and this is one such point where a lot of students face a lot of trouble also. Now, although Weddell contributes a mere 3.2% of WEMA's profit before income taxes, we are talking about the contribution that is there of the subsidiary in the company's financial statement. It comprises 31% of total assets. The subsidiary is therefore material to the consolidated financial statements. The amount of the contingent liability disclosed is immaterial to WEMA, being 1.6% of WEMA's profit before income taxes and less than 0.2% of total assets. The amount of the legal liability for cost and damages not provided for is material to WEMA, being 8.9% of WEMA's profit before taxes and 1% of total asset. It is 3.2% of Weddell's total asset and would turn its reported profit into a loss. Please do these relevant calculations just in case if we face any trouble in any of these calculations. Please feel free to let me know. Now the court's verdict in May 2025 was an existing event providing additional evidence regarding the amount and likelihood of a settlement. Yes, so it should be adjusted for. The lodgement of an appeal is also an event for the reporting period. So do we need to write the similar considerations and the audit evidences? No, my dear friends, you do not need to write similarly. What you can do is you can write 2 to 3 points for the audit procedures, and you can write 2 to 3 points for the considerations based on the marks. If the total marks is 8 marks, you can write 4 points for each. Now, as Vedal is a subsidiary, it is by definition controlled by VEMA, and the management of Vedal can be instructed to adjust the subsidiary's financial statements also. Now, the auditor of Vedal company should request that an adjustment be made in Vedal's financial statements. If the amount is not adjusted in Vedal's financial statements, an adjustment could be made by VEMA's management on consolidation also. Now, audit evidences. Audit evidences are pretty simple for this. The official notification of the court's ruling should be obtained. A copy of the appeal lodged with the court should be obtained just to ensure that whether what management is saying is true or not. Legal advice regarding the possible sources of the appeal should be there. Copy correspondence with legal advisors, including a copy of external confirmation letter, should be obtained. Consolidation or reporting pack from Vedal and their local auditor report thereon should be taken. The local firm's auditors report on Vedal company's financial statements when available should be taken and verified whether relevant changes have been made or not. Sir, do we need to remember the exact points and write it? No, you can write it in your own words, but please make sure that you write the keywords that we have discussed about. The materiality calculations are important for you. Now, what is more important to understand is you do not need to cover all the pointers. Can you mix in one pointer all the relevant pointers related to it? Yes. Can you write 2 to 3 pointers for audit procedures? Yes. Can you write 2 to 3 pointers for the considerations? Yes. It is not important that you write such a length of the answer only, but what is more important is you should be having a coverage of all the key issues, all the key considerations, and all the relevant key audit procedures also. How do we write the answer for audit procedure? Yesterday we have conducted a session where I specifically told you how to draft the writing for audit procedure. How do you draft the audit procedure? You have to follow the same procedure here. No change should be available. Understood? Now, let's jump to question number 3 here. When we talk about question number 3, it's a small question, not a very big question, but see, again the similar question. Comment on the matters that you should consider and state the evidence that you should expect to find. My dear friends, this is a homework question because this is asking you to do the similar thing. You can do the similar thing. Just in case if you face any trouble, please let me know. Then let's jump to question number 4. Let's see what is it. Question number 4, comment on the matters that you should consider, describe the audit evidence that you should expect to find, right? Homework question, right? Please practice it from your end. If you face any trouble, can you ask me? Yes, definitely you should ask me. Yes. Now, third question, fifth question as in your review of the audit working papers, comment on the matters that you should consider and state the audit evidences that you should expect to find. Again, similar question, homework question, right? See, these are similar questions, so these should be your homework questions as well, right? But sir, if we face trouble, can we share it with you? Yes, definitely you should share it with me. I would be happy to help you here. Then let's talk about Clooney company. Okay, again, let's read the requirement. Comment on the matters that you should consider and state the audit evidences. See, the pointers are being changed, but the method, will it change? No, the method will not be changed. Again, homework question, right? Similar question as in. When I'm writing homework, what I'm meaning is that it is a similar question. Then let's talk about question number 7. Okay, question number 7. What is the question number 7? Comment on the matters that you should consider and explain the audit evidences. So see, if we will be covering every particular point in the class, how will you practice, right? So these are very, very important. Okay. Now question number 8, sir, how many total questions are there? There are 10 plus questions. I think approximately 12 questions are there. Okay, question number 8, again see. What is it? What is the requirement? Comment on the matters to be considered and explain the audit evidences you would expect to find. So all of these things are very, very important for us to understand that there are similar questions that you should be able to handle now. You just need to complete it once, okay? But do not just read it. Try to write the pointers. Even if you're not writing the full pointers, draft your answer in a little manner and then compare your answer whether you have covered all the relevant pointers or not. Now question number 9. Okay, question number 9. Again, let's see. Comment on the sufficiency and appropriateness of audit evidences obtained. Recommend further audit procedures to be performed by audit team. Explain the matters which should be included in a report communicating deficiencies in internal control. This looks like a little bit of new questions, right? So question number 9. Okay. But before we solve this, let's read other questions as well. Then we'll select one more question to solve today. Okay. What is this? Comment on the matters to be considered and explain the audit evidences that you would expect to find. So question number 10 is again homework question. Similar question, right? Homework question. Then question number 11. See, this is the same answer from different aspects. Now question number 11. Question number 9 we will be solving. For sure we will be solving. Now question number 11. Question number 11. Let's read what is it. What is the requirement? Evaluate the matters to be considered and audit evidences. See again. So is this the similar question that could be asked in the examination? Yes. A similar question could be asked in the examination also. This happens in case of AAA. So whenever you see that there's a very big chapter, do not worry about it. There are some similar patterns that could be asked in the examination, right? Now question number 12. When we talk about question number 12, what is the requirement? See, considerations and audit procedures. Question number 10, 12, homework. Now, question number 12, I think it should get completed now. Yes, this will get completed, right? Now, question number 9 needs to be solved here. Question number 9 needs to be solved here. Yes, let's try to solve it. Question number 9. Question number 9. Let's try to solve it. Question number 9. Not this one. This one, right? Question number 9. This needs to be solved here. If you want a break of 2 minutes, do let me know. If you want a break of 2 minutes, do let me know. If you are tired, do let me know if you want a break of 2 minutes. Yes. If you want a break of 2 minutes, do let me know. Because see, after question number 1 and 2, there are all other questions are similar to what we have solved, right? The similar audit strategy needs to be formed. The similar pattern of answer writing should be formed. But question number 9 is a little new one question. So yes, tell me. Let's take a 2 minutes break. Okay, let's take a 2 minutes break. Then we will be jumping on question number 9. Okay, yes. Yes, I hope the break is done. Now let's jump into question number 9. We will be taking maximum 15 to 20 minutes, so you can relax now. It is 1st July 2025. You are the manager responsible for the audit of Therman Company. Okay, this is the name of the company. A manufacturing company which supplies stainless steel components to a wide range of industries. Okay. The company's financial year ended. Okay, one query that has been asked is, sir, if we skip the other questions, will it work? No, it will not work. Why so? Because the pattern is same, but the details might be different. And if you want to score good marks in your AAA paper, you should not avoid any of the particular view, any of the particular vision. That is why I'm asking you, I'm telling you that if you need any help from me, please let me know. But please cover all the questions. Now, a manufacturing company which supplies stainless steel components to a wide range of industries. The company's financial year ended on 31st March 2025 and you are reviewing the audit work. So this is after 3 months, right? After 3 months of year end. After 3 months from year end. Now, and you are reviewing the audit work completed on a number of material balances and transactions. Okay. Assets held for sale, asset expenditure and payroll expenses. These three are there. One is balance sheet item and the rest two are, one is P&L item and asset expenditure. Now it depends that what kind of expenditure it is. If it is incurred to bring the asset to its intended use, then it is capitalized. If it is not, then it is not capitalized. A summary of the work performed is given in the exhibits, and in each case the description of the auditor indicates the full extent of the audit procedure carried out. So you cannot make any assumption. Whatever has been performed, that has been mentioned over here. Now the following exhibits provide information relevant to the question. Number 1, assets held for sale, a summary of audit work performed, asset expenditure, a summary of audit work performed, and payroll expenses. These three are given. See, this is such a big file, so sometimes this might happen. Don't worry about it. Yes. 109, but not just 109. After that also so many pages have passed. So this is question number 10. Oh my god, wow, we have jumped to question number 9 only. Wow, amazing. Okay, now these three have been done, so let's read the exhibits. Okay, and then what we are required to do: comment on the sufficiency and appropriateness of the audit evidences performed, recommend further audit procedure if something is remaining, and explain the matters which should be included in a report, communicating deficiencies in internal controls to those having governance. Okay, so number 1, due to the planned disposal of one of the, we will solve one by one. Okay, we will read one paragraph, we will discuss about it, you will take 2 to 3 minutes to draft your answer, then we will be discussing about it, then we will be reading the answer for that. Due to the planned disposal of one of Therman Company's factory sites, the property and associated assets have been classified as held for sale in the financial statements. Okay, a manual journal has been posted by the finance director to reclassify the assets as current assets and to adjust the value of the assets for impairment and reversal of depreciation charge from the date at which the asset met the criteria to be classified as held for sale. So the relevant accounting adjustments has been done. Okay, what are the accounting adjustments? Impairment adjustments, reversal of depreciation charge. Okay. Now, the finance director asked the audit senior to check the journal before it was posted on the basis of there being no one with the relevant knowledge to do this at Therman companies. So they have asked the auditor to do it. Okay. Now, the planned disposal were discussed with the management. A brief note has been put into the audit working papers stating that in management's opinion, the accounting treatment to classify the factory as held for sale is correct. The manual journal has been arithmetically checked by a different member of the audit team and the amounts agreed back to the non-current asset register. So the calculation, the casting check has been done. But the main question that is here is whether it should be classified as held for sale or not, right? That is very important. Okay. So what you need to answer is comment on the sufficiency and appropriateness of the audit evidences obtained, recommend further audit procedure, and explain the matters that should be communicated to management in case of deficiencies in internal control. Okay. So let me write it. Sufficiency and appropriateness of audit evidences, further audit procedures, and then third one, reporting requirements for deficiencies in internal controls. Please take 2 to 3 minutes, draft your answer for this one, then we will be discussing about it. Yes, I hope it's done. It was an easier one. So when we talk about the sufficiency and appropriateness of audit evidence, I can see that there have been only two procedures that have been performed. One is the inquiry from the management and another one is the recalculation. But I don't think so that for such a big transaction of changing the classification to held for sale, these two procedures are sufficient, because inquiry could be wrong, management could be lying. Recalculation is just one proof that whatever they have done is correct, but it is only casting wise correct. It is not adjustment wise correct, right? Now, what are the further audit procedure? So we should try to obtain the information from the management regarding whether the board has approved the sale or not, whether the criteria for identifying this particular factory as held for sale matches or not as per the relevant standards. Then what we have to understand is what is the source of the calculation that has been done by the management, whether they have actually brought it down to fair value or less cost to sell or not, all of these things, and what is the status of whether they will be able to sell it within the relevant time period or not, all of that. Then when we talk about the reporting part, see, in this particular case, the director has itself told the auditor that we do not have any specialist person over here who can finalize the amounts for this, and they are asking for the auditor assistance for this. Now this is very important, that this internal control is very important to the financial reporting closure process, right? FSCP process. So this becomes a significant issue, significant finding that should be communicated to the those shall governance, right? All of these points are important. Now let's go and read the answer for this one. So assets held for sale, okay, this one is the point. This one is the point. Now, audit evidence obtained. The evidence does not appear to be sufficient to draw a conclusion on the appropriateness of classifying the property and any other related asset and liabilities as held for sale. A discussion with the management regarding the accounting treatment is relevant, as the audit team will need to understand management's rationale. However, management's explanation should not be accepted at face value, like we have discussed. Okay. Now, in terms of the manual journal, checking that it is arithmetically correct while relevant is not sufficient evidence. This is also something that we have discussed. Further audit procedure. Review board minutes to confirm that the sale of the factory has been approved and agree to the date of the approval. This is important. Then obtain correspondence with estate agents to confirm that factory is being actively marketed for sale or not, right? Then obtain confirmation that production at the factory has stopped or not. Otherwise, this is continuously being done. Use an auditor's expert to confirm the fair value of the property, whether it is appropriate or not. Using management's accounts, determine whether the factory is a separate major line of business and whether there could be an issue on going concern of the management or not, and whether it has been disclosed as the discontinued operation or not. Now, report to those with governance. What is more important to understand here is, in deciding whether a control deficiency is significant, one of the matters which should be considered is importance of the control to the financial reporting closure process, right? Then, therefore, the journal posted by the finance director should be subject to some form of control procedure, for example, approval by the board or the audit committee. Now, in addition, the finance director should not be asking the audit team to check his figures. This could be perceived as a self-review threat that we have discussed under the ethics. This should potentially be flagged to the audit committee also. The fact that there is, according to the finance director, no one else at the company with relevant knowledge is concerning. The audit committee should be made aware of this and appropriate steps taken to ensure that sufficiently knowledgeable personnel are hired within the company to handle such transactions. Okay, with this we have completed this part. Now let's jump to the second part. There are total 3 parts, right? So now let's jump to the second part. The second part is asset expenditure, right? So when auditing the company's asset expenditure, the audit team selected a material transaction to test. See, we are following this pattern that we read the question, we try to highlight the pointers, then I give you certain time, and then after that we discuss the question again, and then we read the answer. So when auditing the company's asset expenditure, the audit team selected a material transaction to test and found that direct controls over asset expenditure were not operating effectively. So this is one important point. Authorization had not been obtained for an order placed for several vehicles, and appropriate segregation of duties over initiating and processing the transaction was not maintained. Okay. The audit team noted details of the control deficiencies and updated the system's notes on the permanent audit file to reflect the deficiencies. They have mentioned it in the permanent audit file. Okay. The audit work completed on this order was to agree. See, whenever we read something here, it's not 100% correct. It is what has been done. Now you have to give your opinion for that. The audit work completed on this order was to agree the purchase of the vehicles to purchase invoices and to the bank ledger account and bank statement. The rest of the audit work on asset expenditure was completed in accordance with the audit program. Okay, understood. Again, sufficiency and appropriateness, further audit procedures, and communication to DCWG, communication of deficiencies. to DCWG. All of this thing is important. Okay. Okay. So please take 2 to 5 minutes, draft your answer, then we will be meeting again. Yes, I hope it's done. So when we discuss about this, you have to be very, very sure that what we are talking about is that the controls are not being performed effectively. The auditor has accepted it. They have performed the rest of the procedures in accordance with the audit program. Is this sufficient? No, this is not sufficient. You should increase the extent of your audit procedures if you got to know that why that the control procedure is not being performed effectively. Plus, there should be one more specific pointer that when the control is not operating effectively, you have to understand the reasons for it. Is it intentional? Is it because of an error? Is it because people are not considering it important enough, or what? That is one thing for sufficiency and appropriateness. Then when we talk about the further audit procedures, what you should do is, you should here see there's a specific point authorization had not been obtained for an order placed for several vehicles. So what you should do is, you should understand whether the vehicles were actually required for the business purposes or not, and whether they are being used for the business purposes of the entity or not. That is the important pointer here. Then what you should do is, you should physically inspect the vehicles, the asset expenditures, whether those vehicles have actually been purchased or not, whether they are actually, you should also take one sample where you will be testing the vehicle, and you will be going to the FAR, which is fixed asset register, and see that whether that particular car exists in that particular asset register or not. Then when we talk about the communication of deficiencies to Doshavi governance, what is important to understand here is that this particular question talks a lot about this particular case. I'm talking about the second case, asset expenditure. It is specifically telling you that a control is not being operating effectively. So what you should do, you should recommend the management that they should put stronger controls over it. They should put a stronger segregation of duties over it to ensure that all the transactions follow the due process or not. You should perform re-performance once the procedure has been done. If it is done before the date of the audit report, then you should re-perform, and you should check whether that corrective control has been performed or not, right? So all of that is there. Now let's discuss about it. So asset expenditure, this one is there, right? Audit work performed. So the audit work has revealed that controls have not been operating, and this should have led to more extensive testing of asset expenditure rather than the audit program being completed as planned. Generally, the audit team should extend audit testing on asset expenditure, for example, by extending sample testing and reducing the level of materiality applied in audit test. The audit team should also investigate why the controls are not operating, considering whether they are being deliberately ignored or overridden, whether time pressure or lack of resources is making the controls difficult to operate, or if there is a suspicion of collusion or possible fraud also. The procedures on the purchase of the vehicles do not appear to cover all relevant assertions. For example, there is nothing to confirm that Thurman has correctly depreciated the vehicles or not. Very important pointer. Now, further audit procedures: obtain the insurance documents, then please physically verify the vehicles, obtain the logbook or vehicle registration document, trace the vehicles to the company's non-asset register, non-current asset register, recalculate the depreciation. All of these are important. When we talk about the report to Doshavi governance, the auditor should report to Doshavi governance that there appears to be a deficiency in the control, while the audit team's findings do not indicate that a fraud is taking place, but there is still a significant fraud risk here that is prevalent. The audit firm should explain the implications of the control deficiencies to management and recommend the improvements also. Okay. Now, Thurman should also be encouraged to improve the control environment, and they should communicate the importance of controls and setting an appropriate tone at the top, that no tolerance of controls being ignored or deliberately not being followed would be acceptable. Okay, now let's go to the third and the last case, and this is our last question for today as well. So don't worry, have a little chill, just discuss about it. Payroll expenses. The payroll function is outsourced to Jackson Company, a service organization. Is it allowed? Yes, sir. ISF 402, right? Which processes all of Thurman Company's salary expenses. The payroll expenses recognized. The payroll expenses recognized in the financial statements have been traced back to year-end reports issued by Jackson Company. Okay. The audit team has had no direct contact with Jackson Company, as the year-end reports were sent to Thurman Company's finance director, who then passed them to the audit team. So there's no direct information that has been taken. Thurman Company employs a few casual workers who are paid in cash at the end of each month. So there's no fixed employment also, and are not entered into the payroll system. Okay. Okay. Few casual workers are there who are paid in cash also. Oh my God. The audit team has agreed the cash payment made back to the petty cash records and amounts involved are considered immaterial. So immaterial amounts are there, and we have tested it also. Okay. Now again, same. Sufficiency and appropriateness of audit procedures, further audit procedures, and communication to Doshavi governance, right? Please take 2 to 3 minutes, draft your answer, then we will be discussing about it once more. Yes. Yes, I hope this particular answer has been done. Now let's discuss about whether the procedure performed is sufficient or not. So my dear friends, what they have done is they have just recalculated it. They have just traced to the Jackson company's statement. It's not correct. What you should do is you should obtain an understanding of the relationship between these two. You should obtain that type 2 report also that we have discussed about. You should evaluate whether the outsourced person, whether they have the relevant competency or not to perform this particular task. What is the qualification that they have? Right, all of these things are very, very important. Then when we talk about further audit procedure, so you should obtain the type 2 report. You should understand the relationship between these two, because the current procedures are not at all sufficient. Then when we discuss about the communication of deficiencies in internal control, so this will be communicated to the management, that in this particular case there is a lot of deficiency that we can observe in case of internal controls, because here the ISA 402 controls are not being put in place. There is no testing over the operating effectiveness of the service organization, and service organization might not be performing their work really well, right? So let's discuss about it. Okay, audit work. The audit work in respect of the payroll needs to be much more thorough. Simply agreeing the amounts to the reports issued by Jackson provides no evidence, right? This is important. Then the audit team seems to have relied on Jackson's year-end reports as being accurate and has not obtained an adequate understanding of the services provided. The audit team needs to obtain assurance on the controls which Jackson has implemented in order to assess the risk of material misstatement. ISA 402 type 2 report, right? With the permission of Thurman, the audit team should contact Jackson with the objective of obtaining more information which can be used to assess how the payroll has been processed. It is recommended that further substantive procedure should be carried out to provide a wider range of evidence on the payroll expenses. In relation to the casual employees, the fact that the amount involved is immaterial means that the audit team does not need to perform any further detailed audit procedure, but there is still a risk related to completeness of these records, so we should obtain certain procedures. We should obtain certain evidences. Now further audit procedure. Review the service agreement between these two. We have discussed about it. Read all the reports made by Jackson during the year to identify any risk of material misstatement. Then discuss and document relevant controls in place at Thurman. For this we can obtain the type 2 report. Read any user manuals or system overviews to assess the efficiency. So spelling is incorrect. Efficiency of controls in place over the processing of payroll. If necessary, obtain a type 1 or type 2 report from Jackson to obtain further assurance on the controls. Develop an expectation of the payroll figures and compare this to the amounts recognized in the financial statements. Perform test of detail by selecting sample from the payroll records and agreeing the amounts to payslips and HR records. Now report to Doshave governance. What is this, sir? Report to Doshave governance. What is this? So the fact that casual employees are being paid from petty cash without being put onto the company's payroll indicates that Thurman may not be complying with the relevant regulations, because even if you are making a small payment out of the company's records, it might result into fraud. For example, that appropriate payroll taxes are not being paid for this. Despite the amount involved being immaterial, the potential non-compliance should be reported to Doshave governance, along with the recommendation that all employees, whether casual or not, should be processed through the company's payroll system, even if you are paying to them in cash. There may be implications for the financial statements if fines or penalties are imposed by tax authorities in respect of the non-compliance. This is what makes this particular point very, very important. With this, we have completed question number 9 also. I am sure that this would be sufficient evidence for you of how do we need to write the answers for chapter number 9. Now, my dear friends, we will meet for the next session and then we will be solving certain more questions. So all the very best. See you in the next session. Just in case if you face any trouble, even in the homework question, please feel free to reach out to me. You can reach out to me via the WhatsApp numbers that has been given to you, or the Telegram channel, or the WhatsApp groups that have been mentioned.